American Tower was a top pick of Dennis Mitchell last night from Century Investments. Here's Tim in Kelowna with a question on that company. Hi, Tim.
Oh, hi, gentlemen. Hi, David. Listen, I understand you're positive on this stock as well. My question is, are you continuing to be? And what about the dividend growth, David? Do you see it going up quite a bit in the next, say, a year?
Right.
I'll hang up and listen to your call. Thanks.
So Tim, American Tower sort of fits into our core theme that we're focused on, which is dividend growth. And it's buying companies that have shareholder-friendly policies around share buybacks and dividend growth. The more certainty you can see from those policies, the more willing investors are willing to step up and buy shares. American Tower has been a big holding of ours over the last couple of years. They went through the change from Corp to Real Estate Investment Trust, and our view was that would unlock a lot of value, and it has. I will say that we have pared back our REIT exposure by about a half in the last 2 months in order to move money into financials, which I think in many cases will show us better dividend growth over the next 12 or 16 months. And specifically, we're looking at U.S. financials who have now met capital requirements. So I like American Tower as a company. We've significantly pared back our exposure. I think that they will have strong dividend growth because they've spent a lot of money up front to make investments, and now the cash flow growth is catching up, and you should see dividend growth. But I think you're going to get better dividend growth out of the financials than the tower companies. We own some American Tower and some SBAC, but we've been carving it back.
All right, very good. Next up is Elizabeth, who's in Peterborough, Ontario. Hi, Elizabeth. How are you?
Thank you very much for taking my call. I'm interested in knowing from Mr. David what he thinks about Martinet, the good and the bad. Thank you very much.
Well, Elizabeth, you're fishing in the right pond. I think that, we talked at the beginning about some core themes that are enjoying some secular improvement. And clearly, there's a lot of pent-up demand in the auto industry. There's a fairly old fleet that's out there on the road. And so we're seeing good auto sales. And I don't necessarily think because the consumer wants to spend lots of money, but they're getting to the point where they have to. So we have focused in Magna in Canada, and in Linamar, both of which are performing a little bit better than the Martinrea. Martinrea's got a good revenue growth rate. It's pretty solid. Their earnings have been a little spottier over the last couple of quarters. So I prefer the Magna to Martinrea. But having said that, I think you focused on the right sector. So if you own the stock already, you're probably okay. If you're looking at what to buy, I would prefer to buy Magna, which gives you better global exposure, or a Linamar that seems to be filling up capacity and raising their margins.
All right, there you go, Elizabeth. Thanks for that question. We'll take a short pause here. We'll come right back. More with David Burrows after this.